Summary and Thoughts of Advanced Techniques in Day Trading by Andrew Aziz. Before we dive into the strategies, I'll share 5 essential principles from this book. If you're serious about improving your trading, take just 10 focused minutes to watch this video carefully. Come back later to review. Repetition builds skill and success. Let's begin and make your learning time truly valuable. 1. Even when a trade fails, you gain wisdom. Each loss can teach you how to trade smarter next time. 2. Stay disciplined. Following your rules is more powerful than chasing fast profits. Protecting capital is your top job. Profit comes after safety. 4. Consistency and patience will build your strength more than one big lucky trade. Believe in your process. With practice, your strategies, judgment, and confidence will improve. Chapter 1. Introduction. In the introduction, Aziz sets the stage for the whole book. He explains why advanced techniques are important for day trading. He shares his trading style, that he treats trading like a business, not gambling. He emphasizes that day trading is inherently probabilistic. You cannot predict every trade will succeed. Instead, your edge comes from having more favorable setups over time. He discusses that losses happen and they must be managed. He also describes how the book is organized. First tools and setup, then watch lists, then charting and patterns, then strategy, and finally risk and mindset. He wants readers to understand that success depends on combining good strategies with discipline, risk control, and mental strength. He warns early that there will be failures and challenges, but persistent work is what matters. Conclusion of Chapter 1. Chapter 1 is like a roadmap. It tells you what to expect and what attitude to bring. The key messages are: treat trading as a business, don't expect every trade to win, and focus on consistency. You must combine tools, strategy, and psychological strength. This chapter also frames that the book is not magic. You will need effort, learning, and adaptation. It encourages you to start with realistic expectations and be prepared to work steadily. Chapter 2. The Trading Tools and Platform. In Chapter 2, Aziz dives into the technical infrastructure of day trading. First, he discusses how to choose a broker. You need one that offers direct market access, low latency, and good execution. Next is the trading platform itself. It must be fast, reliable, and allow you to see real-time data, charts, and make orders quickly. He explains various types of orders: market orders, limit orders, stop orders, trailing stops, stop limit, stop range, and more. He also covers hotkeys, keyboard shortcuts, so you can act quickly. A big part is NASDAQ Level 2, the bid-ask data. This shows you the multiple levels of buyers and sellers and market depth. He includes market view, montage windows, and how to read real-time market data, volume bid-ask order book. He also addresses short selling restrictions and explains how margin or borrowing rules can affect what trades you can do. Through all this, he emphasizes that even the best strategy fails if your tools are slow or unreliable. So solid infrastructure is foundational. Conclusion of Chapter 2. This chapter teaches you that good tools and setup are not optional. They are essential. Without fast execution, good data, and reliable orders, even a strong strategy can fail. Use a broker with direct access. Master your platform. Use hotkeys, learn order types, and study Level 2 data. Strong setups support strong strategies. Chapter 3. Building your trading watch list. In Chapter 3, Aziz shows how to pick which stocks to watch on each trading day. He introduces stocks in play. These are stocks that are active, showing movement or volatility, often driven by news or catalysts. He describes how float, how many shares are freely tradable, and market capitalization matter. Low float stocks often move more sharply, but also more risk. Pre-market gappers are stocks whose price jumped before market open. These often present trading opportunities. He explains how to run real-time intraday scans, software filters, to spot candidates during the trading day. Momentum up, reversal, volume spike. He emphasizes you must plan ahead. Before the market opens, you choose a watch list and criteria for entry-exit. Using scanners and filters, you narrow down dozens of stocks to a few that meet your rules. He also warns, don't watch too many stocks. Focus is key. The goal is not to chase everything, but to have a manageable set to monitor carefully. Conclusion of Chapter 3. Chapter 3 helps you pick the right stocks to trade, ones with movement and potential. Use scanners, filter by float, market cap, watch pre-market gappers, and plan ahead. Rather than trying to trade everything, choose a few good candidates and watch them closely. Your watch list is your first step to good trades. Chapter 4. Support and Resistance. Levels. Chapter 4 is about support and resistance. Crucial zones where price often stops, reverses, or breaks. Aziz first defines what support, a floor where buyers tend to step in, and resistance, a ceiling where sellers resist, are. He then shows how to find them by looking at past price swings, highs and lows, pivot points, trend lines, and zones where volume was heavy. He emphasizes zones rather than exact lines because markets rarely hit exactly one price. He teaches how to draw horizontal lines, diagonal trend lines, and how to confirm a level by how price behaves when it approaches it. Does it bounce or break? He mentions that combining support resistance with other signals, volume, candlestick behavior, increases reliability. Also, he warns that once a level is broken, it can flip. A resistance may become support and vice versa. Conclusion of Chapter 4. Support and resistance are the backbone of trading decisions. By locating these zones, you know where price might pause or reverse. But don't treat them like exact lines. Use zones and confirm with other factors. And remember, once price breaks a level, that level may change its role. Always use these zones in conjunction with other signals. Chapter 5. Price Action, Candlesticks and Trade Management. In Chapter 5, Aziz explores how price action reveals what traders are thinking and how candlestick patterns help you read that. He ties price action to the idea of mass psychology, collective behavior of buyers and sellers. He shows bullish and bearish candlesticks, long bodies, wicks, and indecision candlesticks, spinning tops, dojis, that signal market hesitation. He explains common patterns, e.g. engulfing, hammer, shooting star, and when they're more reliable, e.g. near support, resistance. Then he shifts to trade management. When you enter a trade, how you manage it. Adjust, stop, scale out, move your stop to break even. He also talks about position sizing, how many shares to trade such that risk is acceptable. He shows how to use NASDAQ Level 2 signals, the order book, to confirm or avoid moves. The goal is to combine patterns, order book clues, and active management to increase your odds. Conclusion of Chapter 5. This chapter teaches you how to read the market's body language through candlesticks and price movement, and then how to manage those trades once you're in. Don't just enter. Plan how to move your stop, take partial profits, and size your positions carefully. Price action plus order book clues plus good management equals stronger trades. Chapter 6. Advanced Day Trading Strategies. Chapter 6 is the core of the book. It presents several useful day trading strategies and then says, don't become a robot who follows only one rule. Learn to read the market and use the right tool at the right time. 1. Fallen angel. What it is. A stock jumps high early in the day. Many buyers push it up. Then it loses energy and starts to fall back down. The angel that rose becomes a fallen angel. How traders use it. Wait for signs that the buying has stopped. For example, price fails to make a new high, candles show big upper wicks, or volume drops while price stalls. Then traders enter a short trade, bet price will go down, or sell a long position. Tip: only try this on stocks with clear early strength that then show weakening signs. Use a strict stop loss because reversals can be quick. 2. ABCD. Reverse, ABCD pattern. What it is, it's a 4-point shape on the chart. A move up, AB, a pullback, BC, then another push, CD. The pattern says, after the pullback finishes, the move may continue to D. How traders use it. Look to enter near point C, expecting the next move up to D. For short trades, use the reverse pattern. Move down, pullback, push down. Tip: combine the pattern with a support level or volume increase for confirmation. Don't trade only the shape. Confirm the market agrees. 3. Bull flag, bear flag. What it is, after a strong move, up for bull flag, down for bear flag, the price moves sideways in a tight channel, the flag. The flag is a rest before the next move in the same direction. How traders use it. Trade the breakout of the flag in the direction of the original move. If price breaks up from a bull flag with volume, it often continues up. Tip: flags are easier to trade when the initial move is sharp and volume is clear. Use size control and a stop under the flag. 4. Opening range breakout, orb. What it is. Look at the first few minutes after the market opens. Common choices: 5, 10, or 15 minutes. The high and low in that time form the opening range. When price breaks out of that range, a strong move may follow. How traders use it. Buy on a clear break above the opening range, or short below the low, but wait for a clean break and volume confirmation. Tip: do not chase small, noisy breakouts. Wait for clear trade prints and volume. Set tight size and stops. 5. VWAP trading. What it is. VWAP, volume-weighted average price. It shows the average price buyers paid, weighted by volume. Traders watch price relative to VWAP. How traders use it. Price above VWAP, market is generally stronger. Consider longs on pullbacks. Price below VWAP, market is weaker. Consider shorts or avoid buying. VWAP is often used as an intraday fairness line. Institutions watch it. Tip: use VWAP as a filter. Don't buy when price is below VWAP unless you have a very clear reversal signal. He also discusses applying all strategies on one stock in play, integrating them, and being flexible. He cautions, don't get stuck on one strategy. Markets change. He encourages developing trading skills, not chasing strategies. You must practice reading charts, watching volume, and noticing how price reacts at support resistance. It will let you choose and combine strategies wisely. Conclusion of Chapter 6. This chapter gives you a toolbox of trading methods. You do not need to use every tool every day. Learn each one, practice in demo, simulated trading, and then use the one that fits the real market moment. The book's main message: skill and judgment, knowing how to read the market and adapt, are more important than following one single rule. Always protect your money, use stops, and keep learning. Chapter 7. Risk and Account Management. Chapter 7 focuses on risk. How to protect your capital. One section warns, don't change a day trade into a swing trade, i.e., don't let a short-term trade become a long-term hold when things don't go your way. He explains risk management, how much you allow yourself to lose per trade, how many open trades simultaneously, how to limit losses monthly. He also revisits position sizing in more depth. You should calculate trade size based on how far your stop is and how much risk you're willing to accept. He shows examples of over-leveraging mistakes. The core message: if you lose too much, your account is destroyed, so you must always stay within risk boundaries. Conclusion of Chapter 7. This chapter reminds you, risk is more important than reward. Even great trades fail. Decide in advance how much you can lose per trade, per month, and stick to it. He often mentions the idea of risking only a small percentage, like 1 to 2% of your total capital per trade. He also suggests a monthly loss limit. If your losses reach a certain percentage, for example 6% of your total account, in 1 month, stop live trading for the rest of the month and practice or review. This prevents emotional overtrading. Protecting what you have is the first rule. Discipline and risk control is what lets you stay in the game. Chapter 8. Conclusion and Final Words. In the conclusion, Aziz wraps up the lessons. He reiterates disclaimers. No guarantee, markets change. Past performance is not future guarantee. He encourages continuous learning, adaptation, humility, and keeping a trading journal. He reminds readers to treat trading like a business, not a game. He also gives parting advice. Avoid overtrading, keep risk small, manage emotions, and develop your judgment. He emphasizes that success is not from one strategy, but from consistent process and evolution. Conclusion of Chapter 8. Chapter 8 ties everything together. The final words remind you to be humble, never stop learning, stick to your process, and respect the risks. The journey of trading is long, not easy. Let your discipline, growth mindset, and consistency carry you forward. My reflections after reading. Reading Advanced Techniques in Day Trading felt like stepping up to the next level. It is more technical and detailed than a beginner's book, but it's still made accessible. Here are my thoughts. What impressed me most? The real trade walkthroughs are gold. Seeing how Aziz thinks in real time helps me see beyond rules. You see judgment, adjustments, and how to react when markets surprise you. The emphasis on risk control and rules makes the book feel safe for learners. It's not about chasing profit blindly. It's about protecting yourself first. Combining multiple signals, VWAP, moving averages, volume patterns, is smart. It reduces false entries. When many things agree, the trade is stronger. The psychological side is well woven in, not just an afterthought. The book often returns to mindset. Don't get greedy, don't revenge trade, follow plan. What was challenging? Parts I questioned. Again, because it's advanced, some chapters assume you already know basic patterns and chart reading. If a beginner reads this without prior knowledge, some parts feel dense. No strategy works every day. Even a well-set orb or fallen angel trade can fail. The book admits this, but in real life that's hard to accept when you see red on your screen. Adjusting when things go wrong is tricky. Aziz shows examples, but when you are in the heat of trading, emotions make decisions harder than reading a book. Some advanced signals may require fast execution and tools that cost money, better data, faster execution. Beginners may struggle with the costs and technical setup. Lessons I will keep. Always ask, does this trade obey my rules? If not, skip it. Sometimes not trading is the best trade. Keep each trade risk small. Even if I lose many trades in a row, losses are controlled so I can survive longer. Use multiple signals together. For example, if price breaks ORB but volume is weak or price is far from VWAP, consider skipping. Use a journal. Write why I entered, how I felt, what went wrong or right. Later I can see patterns in my mistakes. Respect psychology. Some days I may be tired or emotional. On those days, I should trade smaller or not at all. Final thoughts. This book is like a toolbox, full of more advanced tools. It doesn't promise that you will be rich fast, but it gives you methods and mindset to try doing things more smartly. If you study, practice, and remain disciplined, you can climb to a higher level. One insight that struck me: trading is not just about charts and patterns. It's also about knowing yourself. Your fears, reactions, strengths, and weaknesses. The strategies are guides, but you must bring discipline, patience, and humility. I feel inspired and cautious. Inspired because now I have more advanced ideas to try in simulation. Cautious because I know real money is risky and not all days will go well, but having this knowledge gives me a better chance. If I were you reading this book, I'd not just read. I'd pause, test small, reflect, and grow slowly. This is a journey, not a sprint. Like this video if you want more insights, and subscribe for more brilliant thoughts.